my name is Kayong. I'm actually based in Malaysia right now. I started my journey in trading since 2012. And since then, I've been doing this trading as well as a little bit on the long-term investing. And of course, on the sidelines, I do a lot of sharings as well, something like what we're doing right now. A quick one on the methodology that I use over here. If you're familiar with this principle called Elliott wave, or this method that we look into the market called Elliott wave, you probably can see on my chart right now on the screen, there are some labelings and things like that. So I'm actually using mainly that principle to analyze the market and of course, trade it. So today's sharing over here will be more on the live market analysis using the principles of Elliott wave. I'll walk you through what are some of the opportunities that you want to keep an eye on, more towards a swing trading perspective. But of course, the other objective here is that you can also take away some of these techniques and of course apply it if, let's say, you're on a shorter term trading time frame, whether is it on the hourly or 30-minute or 15-minute. You can then take this principle and apply it into your own trading. With that said, okay, let's get started and jump straight into the market and walk you through some of the things over here. First up, I always look into the dollar index because I think that gives us a broad picture understanding of where the US dollar is heading. And that will be crucial if you're looking at dollar related major pairs or even some, commodities, or even the S&P index. It kind of relates to the dollar. Okay? So it's always good to understand, moving forward, is the dollar likely going to strengthen or weakening? So right now, as we are speaking now, right, we kind of see the dollar actually went down, or I would say the dollar weakens a little bit as of today. But let me bring you maybe on the higher time frame perspective first, okay? Over here, from a larger scheme of things, since the late 2022 period where we have this high in September, the dollar actually has fallen quite a little bit. Overall, from an Elliott wave perspective, we might see this as a completed cycle, which within it, we have that 1, 2, 3, 4, 5. Now, from Elliott wave principle, whenever we get a complete cycle of a 5-wave in any direction, we expect a minimum 3-wave pullback. So right now on this daily chart, we are seeing this as a potential one. So maybe we'll get another pullback here a little bit to complete the second wave, and we then expect a third wave up to give us a bigger corrective structure before the bigger downtrend that will likely continue with the dollar. Now, this is purely from a technical perspective. If we are going to add in the element of fundamental analysis, which may also align with a longer term downtrend for the US dollar, right? Because right now, the Fed is still essentially looking to hike. Either is it going to be one more time or two more times, or even maintaining interest rate after that. But at some point in time, the Fed will eventually cut rates again. The question is just about when, because eventually a recession will come and then the Fed will then have to cut. Now, with that in mind, then of course, from a technical point of view, we can also have that kind of alignment where fundamental, the Fed decides to cut rate. And from a technical point of view, we get a very, very decent sell trade opportunity in the USD. So that's on the bigger scheme of things, right? Higher time frame perspective. So if today you go back down to the forward chart, initially, my expectation on dollar index is it will likely come back and retest at 105.60, which is basically that previous high. But right now, as price is coming down for today, what we might start to conclude or start to see is this may have completed that peak, which will put you around 105.40, which is pretty close to 105.60, right? So we just missed that perhaps a little bit. And right now we are seeing that kind of drop, the rejection from the high, quite significant. So from this perspective here, I'm going to use a little bit of a fibs from the swing low to the swing high. And we would like to monitor that 50 and 618 fibs. So the directional bias here will probably shift a little bit towards neutral, at least for now. And what I'll share with you, what's going to give us that confirmation for a potential sell trade opportunity. But for now, we're going to be looking at more of a neutral as of today. And the level around that 50% fit or even that 618 is somewhere around 103.10. And basically what we are looking at right now is if this is going to be the top around 105.40 from an Elliott wave perspective, after this 3-wave has been done, we then also expect a 1, 2, 3 down here, coming back to retest that 50 and 618. So what it means, right, from an Elliott wave point of view is that if we can get a decent corrective structure that looks like this, we can look for one more sell opportunity, at least for the short term to the downside. And then we then rotate and expect the dollar then bounce up from here afterwards. So I would say perhaps at least for the next 2 to 3 weeks, we'll be looking out for potential sell in the dollar. And then maybe going into the end of this month or even next month, starting in April, we'll be then looking at potential buy opportunities by then. But for now, I think March, looking at how the dollar is reacting as of today, we might get a good opportunity to look at sell opportunity for the next 2 to 3 weeks. I want to introduce you to a pattern, a way in which the market tends to move. We call it a correction. So how it looks something like that. And it also looks something like that, right? Of course, depending on the direction, right? This is slanting to the upside. This is slanting to the downside. But the nature of this development, you can see, is basically very slow. You can see as the market goes up, it goes up very, very slow. As it comes down very, very slow. So these are what we call corrections. So a correction is more or less some form of a confirmation. So what I mean is that if today the market is coming down, and if I were to take this piece here and we kind of put it over here and say that, okay, if the next 1 to 1.5 days, the market does this correction pattern, then we have a very good possibility that this will continue to drop, and therefore this becomes a sell setup. So you can see again here, every time we see this, there's a very high possibility the market will drop. So if you're going to see this again here, there's a very high possibility the market will drop. So that's where you can see right now, I would say today, maybe going into tomorrow, we're a little bit on the neutral side. But once we see this, we'll be holding a bearish bias and we'll be looking for a sell. And for the dollar index, then our target for the short term is around 103.10 to around 102.55, which is going to put you very, very nicely back to where this structure area is. So for now, this is the outlook for the US dollar. We're going to wait for a little bit of a corrective structure and then we'll look for that sell. So if the dollar index are suggesting that we're going to see some weakness in the dollar, then of course you need to then put that into some of the major pairs, right? So if you're looking at like dollar yen, you can expect sell side. If you're looking at euro dollar, you can expect a little bit upside. Or if you're trading gold, then you can expect gold to maybe go up a little bit higher, because if the dollar is going to be weak and gold price itself doesn't change, then of course XAU USD, that particular pair would go up. So this is why it's important to look at dollar index. And as of now, this is rather clear to me as a Elliott wave structure. If you would like to, you can also add in a little bit of a trend line here. I think that just broke as of today. You can see this low. And that kind of gives us that perspective where if the next 1 or 2 days we get a corrective structure, then we'll be definitely looking for that sell setup in the US dollar. Now, with that, let's go into euro. So right now you can see as of today it's coming out. So this would be shifting it a little bit to neutral. So our bias yesterday on euro dollar was looking at downside. Again, if you can get a corrective structure here, we're expecting this to drop back and retest the low. But as of today, we can see that this bounced quite strong. So over here, personally suggest that you want to give it a little bit while, right? In fact, you can see over here, this was done earlier this morning. We mentioned that if you do not have any sell trade, just be patient and wait for the next setup, because we're kind of anticipating that a potential U-turn may come. If I were to update this analysis and this chart here, it's going to look like that right now. So this is going to be around 1.0530. And we're going to put in that fib from swing high to swing low. And we're going to expect that 50 to 618 region. And that comes quite nicely with previous support resistance area too. So this one here, if you go to the daily time frame, is going to be looking quite clear as well. So let me walk you through again. We have a very clear 1, 2, 3, 4, 5. So we expect a 1, 2, 3. After a 5-wave move from Elliott wave principle, we expect a 3-wave pullback. And then after that, a continuation perhaps. So short term, for the next 2 to 3 weeks, we'll be looking for this potential buy. And then after that, we'll be looking at a potential sell, then a potential bigger move to the upside. So we don't need to talk about this too yet, because we're going to focus on what's the nearest term to us, which is a potential buy trade. So going back to the 4-hour, obviously we're not going to buy now, but just now I introduced you to the correction pattern, right? So basically you want to wait for something like that, a slow little move that is pulling back. That would then give you that buy trade setup to take it back towards that 50 and 618. So how can you get involved in a trade? Generally, there are two types that you can get involved in. One is called retracement trade, which you use a little bit of Fibonacci retracement pullback to identify for an entry area. The other technique you can utilize is what we call a breakout. So what's a pullback? Pullback, basically, you can see this is going up pretty strong, and we don't want to buy at the very, very top, right? Or similarly, if the market is coming down very strong, we don't want to sell it at the very, very bottom. So what we want to do is we want to wait for a pullback. So a pullback itself is also what we call a corrective structure, right? So just now I actually take some example over here. We map it over here. We want it to go slow, so something like that. So there are two ways to get involved, right? One is you wait for the pullback. You try to catch it at the very, very bottom of this pullback. And then the other one is you wait for the breakout, right? So you wait for the pullback and then you wait for the market to break above that and then you get involved in it. So one is called breakout. One is called retracement entry. So you need to then, of course, find out, right, which kind of style fits you a little bit more. So that's all from me then. All the best to trading, manage your risks, and I'll see you guys in the next session. Yeah, see you guys. Bye-bye.